What if someone paid you serious money to just do less of something? That's exactly what just happened in Indian agriculture, and the buyer is Amazon. Here's the deal, and I mean that literally. Amazon just handed over 280 crore rupees, that's roughly $30 million, to 13,000 Indian rice farmers, not for rice, for not polluting. Let that sink in for a second. This is a carbon credit deal, signed between Amazon and something called the Good Rice Alliance, led by agri-giant Bayer, with Gen Zero and Shell nature-based solutions also in the mix. And the scale of this thing is genuinely wild. We're talking 685,000 metric tons of CO2 equivalent credits sourced from 35,000 hectares of rice fields across India. Now, carbon credits. Think of them like pollution vouchers. You emit greenhouse gases, you buy credits to offset that. Simple enough. But here's where it gets interesting. What are these farmers actually selling? Methane reduction. Because rice farming, weirdly, is a climate villain most people have never heard of. Flooded rice paddies are basically methane factories. Perfect warm, wet conditions for methane-producing bacteria to go absolutely wild. And methane is no joke. It's 27 times more potent than CO2 as a greenhouse gas. India, being the world's largest rice producer and the third largest methane emitter globally, is sitting right at the center of this problem. So the fix these farmers are adopting is called alternate wetting and drying, AWD for short. Instead of keeping fields permanently flooded, you let the soil dry out periodically. Less standing water, less methane. Think of it like turning off a leaking tap. The methane that never gets released becomes a carbon credit that a company like Amazon can purchase to balance out its own emissions. It's elegant, honestly. A new market funded by global tech and energy giants opening up right inside Indian agriculture. But this raises a pretty obvious question. Is this actually good for the farmers, or is it just good optics for Amazon? That's where things get a little more complicated. Let's get into it. So now that you know what the deal is, the real question is, who actually comes out ahead here, and who should be quietly sweating? Let's start with the obvious winner, Bayer AG. They're pulling off what every corporate strategist dreams about, a double win. Carbon credit revenue coming in today, and a shinier ESG score boosting their stock appeal tomorrow. And as the infographic shows, that dual benefit, carbon revenue plus ESG valuation premium, makes Bayer a genuinely more attractive bet for agri-tech investors right now. That's not spin, that's just how ESG compliant positioning works in modern markets. Then there are the 13,000 Indian rice farmers getting trained in the AWD technique. And this one actually matters if you're anywhere near agribusiness or rural supply chains. They get hands-on training, direct financial incentives, and because AWD cuts water usage significantly, their input costs drop too, earning more while spending less. In Indian agriculture, that's almost unheard of. Carbon verification firms like Verra and Gold Standard also quietly win here, because as agriculture-based credits scale up, demand for their auditing services scales with it. Now, the nervous side of the room. High-emission industries like steel and cement. If India's carbon credit trading scheme expands, they could face mandatory compliance costs, buy credits, or pay penalties. That squeezes margins in sectors that are already capital-heavy. And for ESG-focused investors, this deal won't move the Sensex. It's a $30 million deal, not a macro event. But it's a solid data point for long-term portfolio positioning in India's voluntary carbon market. Bottom line, if your business touches agri-tech, sustainability consulting, carbon verification, or rural supply chains, this deal just cracked open a door worth walking through. Next up, we zoom out and look at the bigger picture, what this signals for India's carbon market and where this whole space is actually heading. So now that you know what happened and how it works, the real question is, what does this mean for the next 3 to 5 years? Because that 280 crore rupees deal, that's just the opening act. Here's the scale we're talking about. The global voluntary carbon market, where companies buy credits by choice, not legal obligation, was worth around $2 billion in 2023. By 2030, it's projected to hit $50 billion. That's not a typo. And India, with its massive agricultural base and serious methane reduction potential, is sitting right at the center of that opportunity. Now for entrepreneurs and agri-tech startups, this is where it gets specific and real. Think carbon credit aggregation platforms connecting small farmers directly to global buyers, AWD monitoring services using IoT sensors. That's smart soil moisture trackers. To verify compliance on the ground, and carbon audit consulting for rural cooperatives. These aren't hypothetical ideas. They're the exact infrastructure gaps this deal just exposed. But hold on. The voluntary carbon market also has a credibility problem. Critics call it a greenwashing bazaar. And honestly, the analogy writes itself. It's like paying your neighbor to exercise while you stay on the couch. The planet doesn't actually get healthier. If verification slips or credits get double counted, the whole market loses trust fast. There's also a policy risk. India's carbon credit trading scheme is still being finalized. So anyone building a business model on carbon credits right now is essentially betting on rules that haven't been fully written yet. So what should you be watching? 3 things. The rollout of India's CCTS framework, whether more global corporations follow Amazon's lead with Indian agri credits, and whether AWD adoption scales beyond these initial 35,000 hectares. India just got a seat at the global carbon economy table. The only question left is, will Indian entrepreneurs and investors pull up a chair or watch from the sidelines? Follow us for more updates like this. Thanks for watching. And don't forget to follow us on YouTube, Instagram, and X.